for this third session of our video conference series on the investment environment in agri-food research and innovation. This session will focus on venture capital and banking, how they work and what they're looking for. And this is why I'm so pleased that we have great panelists and our own moderator, board member John Hyshka as well, that will discuss this issue with you. So I wanted to welcome all of you and to remind you that we're using the Q&A button at the bottom of your screen to enable you to ask questions, and the moderator, once a few of the main elements have gone through, will be looking at the questions and getting them through. As well, you can raise your hand. So you can raise your hand as well in the Q&A button, and you can vote as well on the questions that are being asked, and that will enable you to upvote a question in order to move it up in the queue, which means that John will be seeing those questions that receive the most votes first. So again, thank you for participating. We have about 90 people registered for this event today. This is great. And I'll let our chair, the Agri-Food Innovation Council chair, Dr. Julianne Curran, provide you some words of welcome as well. Thank you.
Thanks, Serge. Hello, everyone. I just want to thank you for participating in today's video conference. This is the third of 4 conferences that have been organized by the Agri-Food Innovation Council. I will just tell you a little bit about AIC. For the past 100 years, this is an organization that has provided leadership in its efforts to advocate on behalf of agri-food research and innovation. We are focused on the development of policies and advocacy at the national level. Today, AIC is led by a board of directors from various parts of the sector. I am the VP of Market Innovation at Pulse Canada, and I'm also the chair of AIC's board of directors. The other members of the board represent different parts of our agri-food sector and hail from most regions of Canada. The membership of AIC includes national, provincial, regional organizations, as well as companies, industry associations, academic institutions, and government organizations that are interested in policies related to agri-food research and innovation. And these members have joined AIC to help shape, support, and accompany our efforts to support a strong Canadian presence in the field. If you have not done so, I encourage you to join AIC to participate in the discussion, help us develop sound policies, and strengthen our voice. As more focus is placed on food production, food safety, and food security, there have been global efforts to increase investments in agri-food research and innovation. In Canada, this includes government, academia, and the private sector. The intent in this series of video conferences is to identify how policies could support the development of a stronger investment system in our sector's research and innovation system. So AIC wishes to extend a thank you to all of our conference partners, including Ag Experts, Canadian Science Publishing, Protein Industries Canada, Ag West Bio, and MyTax. So thank you all. I would like to introduce John Hyshka, the president of Prairie Tide Diversified, and also the treasurer of the board of directors at Agri-Food Innovation Council, who is our moderator for today. John, over to you.
Well, thank you very much, Juliana. I'm looking forward to today's session, and I want to thank everyone for attending. Because I'm the treasurer of AIC, I'm hoping everyone will buy a membership at the end of the session. So that's my treasurer's pitch. I've been involved in agriculture, I guess, as a farm boy, and I've grown up. I'm a serial entrepreneur that have been involved with both raising capital through angel network, through venture capital, through private equity, and through banks. So I'm very excited to look at the panel that we have today, and I'm going to introduce the panel members to get their insight on what they think is going on in regards to venture capital and banking. And I'll just bring up the three panelists. Of course, we have Warren Bergen, who is President and CEO of AVAC, who has over $100 million in investment capital. But more than that, Warren has a number of years of experience of both as being an entrepreneur, not just as an investor. And I look forward to his comments in regards to these questions. We also have Eric Dillon and his perspective as the CEO of Conexus, who is both a credit union and a venture fund. So he sees both the perspective from the banking side as well as the venture side. And I'm very excited to get his intake because he's been able to see both sides of it. And the final member of our panel is Andrew Heintzman, and I apologize if I've mispronounced your last name, but I'm very impressed with what he's done as well. He's the managing partner and co-founder of InvestEco Capital, which is an impact investment firm focused on investing in companies that promote health and sustainability in the food sector. Well, I've had discussions with all the panelists, and I'm very excited in regards to what they have to say in regards to what's been going on in regards to banking and venture capital. I'm going to also get both of them before we get into the questions that have been posed to them prior to the event, to get them to say a couple of words on what they think of the current environment of venture capital and banking and its roles in agriculture. As we're aware, 2020 has been a very tough year. I've been involved in regards to raising some capital for different agricultural companies. And I found that once COVID hit, as well as the oil prices, it really did impact the availability of what I would call angel and seed capital for ag tech and food companies. But I'm starting to see it bounce back. The venture and private equity I've seen has always been there, but they're also looking at different gaps. With that, Warren, if you would mind saying a couple of words of what your thoughts are on the current venture capital and banking industries for agriculture in Canada.
Sure. So we're not involved in the banking end of that, so I'll let Eric speak to that. But on the venture capital side, so AVAC has been investing in the space since 1998, and we've invested in over 100 companies that are related to agri-value and IT, and we spread our investments, into those two very different camps, and for good reason. But having been a former IT entrepreneur, and now ag and IT investor, I see a number of parallels between those two industries in Canada and in North America more broadly. So in the mid-90s, when I started my first IT company, that was still frankly a new idea here, and particularly in Alberta. There was no real infrastructure, from an ecosystem perspective for that to be, a normal thing or a supported thing. There was no venture capital companies in Alberta specific to tech at that time. There was no mentorship programs in place. There were no startup facilities, incubators, accelerators. Those kinds of things just didn't exist as they all do now. And it's a very good time to be an entrepreneur in tech in this space. And what that took was literally thousands of companies, even just in this province, over the ensuing 25 years, for the industry to mature to a place where the venture capital industry has a significant selection of not only good technologies to back, but great teams to back. And that took a lot of time to build. And I see very much the same thing needs to occur in ag tech and in agriculture. By the same token, you know, it's in many ways, I can't say that this is true for all of the verticals within the very broad swath of agriculture, but in many verticals within that, it's 1995 here in Canada by comparison. And, you know, there's no cheap or easy way to develop out the infrastructure so that it becomes, so that investment becomes commonplace. And if I go back to IT again, you know, it's very common now for IT exits in Canada to be 9-figure exits and multi-billion-dollar IPOs to occur in the country. And 25 years ago, you know, we were pretty sparse in terms of our exits, and we were typically talking about $25 and $30 million exits instead of the big wins we have today. And it's because we have the teams that are backable and technologies that are backable. So from an ag perspective, there are places, but few and far between, that match that same criteria. So one of the things that we're doing at AVAC is we've launched, and I should say, on the back of having invested in, you know, over 100 companies with first-time CEOs that are also first-time founders, you know, we certainly have the statistical data to show that that's perhaps not a great way to multiply your capital. So our newest fund, which is, you know, Carrot Ventures, what we're doing there is we're actually creating our own companies where we're getting control of the agriculture-related technologies. We're undertaking, you know, an international search to find the best CEO who can be the best founder, who has all the experience and you know, sectoral expertise to turn this into a win. And then we're going to put down a term sheet in front of that new founder, and this will become our team. So Carrot Ventures, it's a new fund for AVAC, and we're just doing our very first company right now, and we're excited about that. And by doing that, we're essentially hoping to leapfrog that 25 years of ecosystem development that IT needed and that ag needs in Canada. And so that's our solution to what we see as a very significant problem.
Thank you, Eric, for your comments. Eric, would you like to say a couple of words on what you see in the current environment?
Sure, John. So, you know, maybe it's a bit curious for those participating today that there's a credit union as a panelist talking about venture funding. It seems like maybe an unusual marriage, but there's, you know, clearly a bit of history for us, and maybe for those in not in Western Canada. Certainly where I live in the Prairies, credit unions and cooperative finance has been a very strong supporter of small business and agriculture going back almost 100 years. And in fact, you know, all cooperatives in Saskatchewan today finance north of 50% of the small business and ag ventures across the entire province. So, you know, I would say we're the, you know, #1 market position partner for small business and agriculture. And what we, of course, about maybe 5 or 6 years ago, we realized that there was this, you know, change afoot, I think, in how businesses are incubated, grown, and scaled. And so we just started to do research, and we went to 13 entrepreneurial ecosystems around the world, frankly, and we went and visited, and just we're learning lots about what made them successful. And then he tried to kind of export some of the best ideas and bring them back here in terms of certainly in the Prairies, trying to build a stronger entrepreneurial ecosystem. And of course, ag is a big part of that. But one of the primary kind of ahas from our research was that some of the best ecosystems in the world at the center have this facilitator role. And the best ones, the most successful ecosystems, that facilitator role was generally played by, you know, a quasi-private sector entity, not by government or not by academia for whatever reason. That was just our experience. And so a few years ago, we certainly made a big play strategically to think differently about how we support high growth companies in our communities. And as a cooperative, you can see that that's kind of purpose aligned for us. So we invested in an incubator a number of years ago that's been quite successful. We put together a venture fund that we manage. Half of it's our money, half of it's money from others in our community, and was quite successful. We've been an investor for some time. That was our first foray into kind of managing the fund on our own behalf. And then more recently, we're very close to building, an accelerator model and associated venture fund in the ag space. I think there's some, I think the momentum is unbelievably strong, John. And so notwithstanding your, earlier comments about the challenges through the pandemic, we, are perhaps as optimistic today as we were pre-pandemic about the opportunities for the growth in ag, value-added ag and ag tech. And in fact, I just came from a tour this morning of the Canadian headquarters of Raven Industries, building very cool, autonomous agriculture infrastructure and watching what they're doing. So, we just think the opportunity is enormous. We're fundraising right now for that second fund and getting, good response from the market. And when we think there's maybe never been a better time to be doubling down on agriculture, ag tech, value-added ag, and certainly, one of the federal government's super clusters, specifically as it relates to proteins, is located here, headquartered here in Saskatchewan. So we think that's an unbelievable competitive advantage to build a really tight and high-performing ecosystem for founders and high-growth companies in our neck of the woods. So thanks for having us.
Well, Eric, thank you for your comments, and I'm glad that you're having more success than I was. Andrew, could you say a couple of words of what you think of the current banking and VC sector is in Canada?
Yeah, for sure. Thanks. Pleasure to be here on this panel. I should say, first off, that my kind of remarks here and throughout are really, from my experience, in a specific niche within the sector. So I kind of I might not have visibility to the broader sector, but where we focus, which is really on food companies, and specifically branded food companies in kind of the better for you aspects of the food sector. The market's been pretty good. And just by way of a background, so we invest in what we call expansion stage companies. So they're companies typically with in and around 5 to 10 million revenues at the time we invest, who are growing quickly, need equity capital to grow, and we invest across North America. And what we're seeing is really strong consumer interest. The consumers are moving into the kind of healthier, better for you branded food companies. So that's where we play. So we're seeing, that just a very kind of very strong tailwinds in general. And I would say, including throughout 2020, and there was a bit of disruption in retail there in May or so, but overall, a lot of our brands have had pretty strong years. And this turning towards kind of healthier food options has continued through 2020. It's obviously that there's a big market opportunity, so that's driving a lot of Canadian companies. There's a big market opportunity in Canada, but a lot of our Canadian brands are also having some success in entering the U.S. market. And while that has its challenges, but it has great opportunities. And there's strong co-investor interest right now, and there's a number of other funds and family office investors and crown corporations and others that are active in this space. So we're able to we're finding we're able to easily fill rounds that of the companies that we're looking to invest in, and that's a nice environment to be in when you can kind of quickly match up with like-minded investors and quickly fill a round. And then the other aspect that I think is a positive one is they're pretty decent exit opportunities. throughout the and growing numbers. So we, just by way of an example, we had one of our US-based companies go public on NASDAQ in end of July, a company called Vital Farms. And that's kind of opened up a new exit avenue, but there's also continued M&A interest from strategics. And so at the moment, at least, it seems like a fairly good time for the sector in Canada and the US.
Andrew, thank you very much for those comments. We're now going to go into the questions that were sent to the panel members beforehand, and we're going to go through those. And if you do have questions, I'll try and monitor them as we're going through this. And then, of course, at the end of these questions, we'll definitely open it up to Q&A. So our first question that was sent to the panel is there a lack of understanding from entrepreneurs on how the banking sector and venture capital work? I'm very interested in your responses. And Warren, can you lead us off on this one?
Certainly, and thank you for the question. So yeah, I mean, the entrepreneurs, and you know, this isn't specific to any sector, always need to become educated on what it is to approach the financial community. And you know, having learned that lesson personally in my own tech company. So, you know, we did a couple of angel rounds, and then when it came time for us to approach the venture capitalists, and we eventually did become venture backed, you know, that first round of funding from the venture capital firms was, I found, extraordinarily, it was an excruciating process, or at least that's how we initially read it. And it wasn't until we were through the process that I actually came to understand that, oh, wait a minute, it's not them, it's me, it's us as a company. We weren't ready. So, you know, there's a data room requirement and a due diligence requirement that is necessary of professional investors and venture capitalists that just doesn't exist, I guess, in the angel investment community. Because we would put on presentations and with very good regularity could collect an angel check, but getting the venture capitalist to write a check has an exceedingly different discipline. And you know, over the course of my career, I've now seen literally thousands and thousands of deals, and having run a couple of angel groups myself, kept seeing the same mistakes being made by entrepreneurs on how they thought they ought to approach you know, the investment community. And so I wrote a book in response to that, which I hoped would help young entrepreneurs to sort of separate themselves from you know, I guess the pack or the other competitors for that dollar. And so the purpose of that, you know, if you consider that a venture capitalist, you know, rule of thumb is that, you know, they'll invest in one company out of 100. And, you know, as I was an entrepreneur, and if I can guess, other entrepreneurs might be interested to know, you know, what separated that one particular deal from the other 99. And so it becomes very, very important for entrepreneurs in that community that are looking for capital to not take it lightly, and just to think that, hey, come look at my my spectacular widget, you would be so lucky to invest, was nearly the attitude I had, you know, when I was raising capital. And you know, there's a tremendous amount of preparation that's required to become worthy or deserved of investing. And certainly the entrepreneurs need to get themselves educated before they attempt to do so.
Warren, I also found that when I was dealing with first-time entrepreneurs, they either had, they didn't understand what the value of their company was, and it was very difficult getting them to understand what was fair valuation and what they should be willing to give up from an equity perspective. And when you start talking to them about valuations and what they would have to give up for $1 million or whatever the amount was, they always want to default into debt without understanding, you know, how difficult it was to get to debt and repay. Did you see that in some of your?
Yeah, all the time, constantly, certainly. Yeah. And so most of the time, you can get through those issues. Lots of times you can't because they think it's worth $1 billion when it's worth nothing. But if they're of reasonable character, you can simply take them through the exercise of starting at the end and working your way back. So if we all have a collective goal to sell this company for $100 million in 8 years or 7 years, we work our way back on how many financings and when it will take to achieve that level of business growth. And every round of capital needs to be sized appropriately so that it can get to our next milestone. So if we are pre-revenue, the next milestone is going to be that we are in revenue and we have our first reseller, and we have metrics of marketing and sales that are now defined and predictable, so that I know that for every dollar that I spend in marketing, it's going to result in dollar plus in revenue. And once I have those metrics, that's when you know that you have a venture capital investable model, is when you know you have those metrics, because a true venture capital deal has scalability, and scalability only occurs when I know what those metrics are, and that by simply pressing the marketing button and generating that leverage, do I know I have a venture deal. Everything else is a lifestyle business or private equity or what have you, but venture is about scale.
Okay. Now, Eric, could I get your comments of both being a banker and a venture capitalist? What are your thoughts when you're seeing entrepreneurs? Do they understand the difference? And
yeah, I think Warren did a great job. And there's only two things I was thinking about as I was listening to him. One was, I think the innovation infrastructure in Canada is relatively immature. I think certainly incubators and accelerators have existed, Toronto, Vancouver, and those places. But in this particular space, that's not really where I think some of the other competitive advantages exist. Certainly vis-a-vis the prairies, it hasn't been the case. There's only a handful of incubators and accelerators. And I think, of course, part of the programming in those kinds of facilities is helping founders understand how to get financed, whether that's venture financed, debt financed, whatever, but how to really access capital to fund growth. So, my view is that as more of those are formed and showing that they're successful in building associated programming, I think the founders are going to be better equipped. The second thing I think is that, of course, most of the capital that exists today that's investing, certainly in the last number of years, has been into the tech space, and the trajectory for a high growth tech company is very different than it will be in the ag or ag tech space. And I think so investor expectations about what the scale up window is for an ag tech company are going to be markedly different. And I'm not sure that the investor community is really well versed in the subtle differences between a normal venture investment in the tech space and the subtle but important differences that we believe at Conexus are going to exist in the ag, value-added ag and ag tech space. So that's the 2 points I would add to Warren's answer, John.
thank you, Eric. Andrew, do you have any additional comments that you'd like to put, what you're seeing?
Yeah, I think, as always, you see a wide array of entrepreneurs who are some sophisticated and knowledgeable about the fundraising process. And we have a number that are second or third time entrepreneurs. And so they come with this knowledge and experience, and that tends to be very helpful. My general thought, the ones that are successful at it kind of understand that it's a long-term partnership thing, and they kind of know that they allocate a certain percentage of their time to it, like they would any other part of their business, and they approach the investor on the basis of thinking of them as a long-term partner. And it's sort of different approach than someone who's just kind of looking for capital only, and is a more transactional kind of approach to this. And so I think that there's I think the difference in those who kind of get it and do it well, and those who don't yet get it is a bit having to do with that attitude almost. And the ones that are good at it also tend to have good advisors too, like especially if they're first time entrepreneurs, because how would you know how to do this if you know? And so they tend to come with good advisors around them. And so those are some of the features of what we see of the entrepreneurs who tend to be successful.
Thank you, Eric. I'm now going to go on to the second question, which is, what are the stages of research and innovation that each banking or venture capital prefer to fund? And Eric, I'm going to get you to lead on this one, but my understanding is banking never likes to fund research or innovation. Please comment and go from there.
Yeah, well, I mean, I think, clearly our move into this space is a signal that we're trying to finance, across maybe a broader spectrum of the phases of company growth. So I think, the traditional boundaries still exist, and they're quite clear that debt financing really today in Canada is largely around companies that profitable, sustainable business plan, historical returns, and those kinds of things. But I think the other thing, John, that you'll recall we chatted about when we first connected was that the amount of R&D in agriculture in Canada, our stats would say only 11% of R&D in Canada is funded from private capital. And in the US, that number is 73%. And I do think that having the R&D invested or funded from private venture or other creates a different discipline around commercialization than perhaps what exists in Canada today, which is where we believe the difference comes from government funding or NGOs or the like. And it's not to say those aren't important, but I do think it creates a different mechanism around the degree to which we get great ideas to scale. The other thing that I think, and maybe it's related and maybe not part of this exact question, John, was just around IP, is that I still believe that there's quite a bit of work to do in Canada around intellectual property and how founders are coached and mentored, and then what are the regulatory and policy regimes in place to protect that? Because with an immature ecosystem, and we saw this also in our research that we did with ecosystems in Australia, was that without those things in place and the right policy protections on intellectual property and an immature ecosystem, is that perhaps some of the most promising startups get acquired too early in the process at discounted valuations, and they're not aware of how to maybe protect the fantastic ideas that they've come up with. So we believe that that's part of the solution as well, and maybe that's later in what AIC's role can be. But I think the traditional boundaries still exist, to answer your question, and clearly, I do think there's momentum though, as private investors, that maybe had historically invested in Canada in the resource economy or the like, they're seeing real competitive advantages to investing in ag and ag tech that exist here in Canada. And at least what we're finding in our fundraising is that there's a real appetite as money moves in the economy towards kind of next generation ideas, that it is, we think lots of it's going to flow into this space, hence why we're here.
I do find one thing that's interesting whenever I'm talking to someone that's invests in mining or different sectors. The one advantage some sectors of agriculture have is you can get quicker into cash flow positivity because your R&D, especially in the food and ingredient side, maybe the ag tech side not as much, but it's one of the advantages that I saw on agriculture. Warren, would you like to add some comments in regards to the stages of investment for a venture or from banking from your perspective?
So, so first of all, I'll go back to the scale element a little bit, just in terms of what's venture capital investable or not. And a lot of the entrepreneurs, they also, again, need to go back to the education key. They need to understand what a venture deal is, right? And that scalability is certainly one of them. So there's a lot of deals inside the ag space that aren't necessarily going to qualify as venture, and maybe they're a lifestyle kind of company, you know, that doesn't want to exit, and maybe they want to make you know, nutrient dense muffins and fill a niche space and not sell, and that can be very good for some companies, but that's not necessarily going to be a venture deal. And then at the other end might be those kinds of companies that are exceedingly capital intensive, you know, where there's you know, a lot of plants that are required to manufacture something, and that's not a good space or a good use of venture capital dollars either. You don't want to be using venture capital dollars on machinery. You don't want to be using venture capital dollars, you know, those kinds of things. It's just, it's highly inefficient use of capital. So scale is certainly, you know, what we're looking for. And sorry, can you repeat the question again? I just wanted to hammer that point home.
Yeah, the question is the different stages of development of a company in research and development, what will a bank fund and the venture capital?
Right. So banks will get engaged, you know, later as soon as they can identify that there's, because there are asset-based lenders and there's cash flow-based lenders, and the cash flow-based lenders will look at a company once they can identify that they can support that stream of debt requirement and maintain it on a serviceable level. But prior to that is where we have to exist, right? Where it's before the banks will get involved. And, you know, for us to have any sort of semblance of I suppose, understanding of security of capital is entirely lays in the hands of the management team and the board that oversees them. So first of all, you want to see a strong board in place. Then you need to understand there's going to be a strong management team in place, or at least a management team that will allow you to build a strong board around them if one doesn't currently exist. And you know, that's one of the things that we're already finding in droves with our Carrot Ventures fund is there is a tremendous amount of technology in this country, but we've done an exceedingly poor job of commercializing it historically. Right. And, you know, the first company that we've undertaken, you know, the CEO that we found after, you know, the search firm, you know, helped us to go find these kinds of individuals, which we would never have been able to find in any other condition. You know, this person has built distribution networks globally, and that person is dropping out to do a startup and has been very entrepreneurial inside of a larger organization, started from zero and built up, you know, multi-hundreds of millions of dollars worth of sales inside the little division inside that company, and is going to be able to bring all of that expertise, all of that network, all of that learning into a company that hasn't even started yet. And so I think our capital is much, much more secure in that environment. So when it comes to stage, is stage the right question? It's like, who are you putting your money with, right? So I would rather put my money in a pre-revenue company with outstanding management than a company that was in market, but management was a B-, because you can't fix B-.
Understood. Andrew, do you have a couple of comments before we go to the next question?
Yeah, no, I agree with what's been said. I might just emphasize, despite Warren's great project or the fund that he's raising now, which is really, really wonderful to hear about, and it serves a real need, because I think, generally speaking, the earlier you go in Canadian capital markets, the less capital there is, and it's at least that's been at least my experience, that the seed funders tend to rely on governments and friends and family sort of more, and there's not a lot of institutional capital at that early stage, and that's I personally believe that's a bit of a challenge for agri-food in Canada, and quite frankly other sectors too. I think overall the good entrepreneurs tend to be able to find the capital, but I suspect there are some really good ideas out there that aren't getting funded because the founder doesn't have friends and family who have investable assets, and so I think that's a bit of a shame, and it's worth just recognizing that fact, especially in comparison to the U.S., where there is a significantly more early stage private capital for startups.
Thank you, Andrew. I'm going to get you first up on this next question in regards to what can organizations like AIC do to better communicate the needs and interests of the banking and venture capital sector to entrepreneurs? Is there a role for organizations like AIC?
I definitely think there is, and I mean one really important role I think is to bring sort of knowledge, mentorship, education. The more the entrepreneurs know about what it means to be funded, who the potential funders are, you can save them tons of time and energy and get them focused on the right approaches to the right types of funders with the right materials and the right presentation materials and data rooms and whatever. And just getting that right, I think, is a huge benefit. So I do think that organizations like AIC, if they're able to bring some of those skills, I mean, in where we are, the Mars Discovery District does do a fair bit of this, and I view it to be actually quite positive for the entrepreneurs, that they get lined up with advisors who know what it means to raise capital and where the right pools of capital are for what's needed at that moment. That's really valuable, and so I think that could be one of the a real assist for entrepreneurs.
Eric, do you have any? Thank you, Andrew. Eric, do you have any comments as well?
Yeah, maybe just one thing to add in that I think that there is an important difference about, I think, the existing venture capital, high growth industries in Canada and ag tech that, lends itself to organizations like AIC, is that our view, at least, and what we've seen in our fundraising efforts for our venture fund, is that there's real interest from across the country, but there's these, in the traditional venture tech company world, there's really one or two epicenters in Canada. And I think Mars is a really great analogy in that it's really easy to kind of get your arms around the parts of the ecosystem that exist in Toronto and in a tight geography, and easy to build cohesion between parts of the ecosystem, whether that's connecting academics, government, procurement, mentors, capital, founders. And doing that in a seamless way around the founder is really easy at a place like Mars. Our view is what's going to emerge in the ag tech space is there's going to be these small micro systems emerge, Regina, Winnipeg, Kelowna, potentially around, the wine industry, those kinds of things. And I think an important role for AIC would be how to build the same kind of cohesion that they have in a tight geography with these disparate, maybe smaller ecosystems. And I think that's a really important role for somebody to play. And I guess my early experience with AIC would be that's maybe something well suited to how the organization is built and what its membership base looks like.
Yeah. Thank you, Eric. Warren, do you have any comments of the roles of organizations like AIC to help promote venture capital and banking to entrepreneurs?
So I think AIC roles would tend towards the policy end of the spectrum. I don't know what the reach is of AIC is to the entrepreneurial community, but however, I think if that kind of reach does exist, I think there's an educational component that's important, and that's a long fuse, but someone needs to undertake that effort. On the policy side, certainly we've got such great resource in the country in terms of not only our natural resources relative to ag, but also the brain trust that exists with technologies, and technologies that want to see the daylight of commercialization. We've only had Carrot Ventures operating for less than a year, and we've had 124 technology disclosures brought to us. And that's from across the country. There's no limit to the technologies. And yet, you know, on a global perspective, on an ag tech commercialization perspective, Canada doesn't yet rank. We're not even part of the global conversation in that regard. You know, yeah, we can point to canola, and we really got it there. But beyond that, you know, it's a difficult place. So I think, you know, if we had support, you know, and that can come by way of tax credits into early stage companies. You know, I think BC has had a tax credit, which us Albertans have looked for with envy for many years. It's been going over 20 years to very good effect over there. And any sort of supporting mechanisms, things like the Growing Forward program, I think was quite effective. And I think, you know, if brought about again, you know, can have direct and impactful ability in this space of startup and investment.
Thank you, Warren, for those comments. I've got you lined up for the next question as well, which I think is one of the most interesting on this panel. But why are VCs not taking, and definitely interested in your opinion, why are VCs not taking more risks in the area that holds such a promise? And what can AIC or governments do to encourage more early stage investing without becoming a simple granting agency? I think you were answering some of that already, but please, I'd love to hear your answer.
So, sorry, can you say that another way? You're muted there.
Yeah, there's basically two parts of the question, and the gist of the first question is why aren't, if agriculture is doing so great and everyone's seeing such great return, why aren't VCs doing, you know, earlier stage investments? And then two is in regards to the role of government and other organizations to help the granting or without having to give out grants, how can they encourage more early stage investing?
Sure. So I think money goes where it's loved, and it's loved when it's multiplied. And you know, bring up a few successes, and the money comes until it comes in such deluge that the dumb money comes in support. And I think we've already seen some of that in a broader North American perspective. You know, I think, you know, the ag tech space became, you know, in vogue, you know, maybe 5-6 years ago. And that really was when Climate Corp sort of made the big splash. And, you know, a couple of guys dropped out of Google to do, you know, weather forecasting for ski hills and farmers, and providing insurance products related to that, and then getting into, you know, the precision farming, and, you know, $1 billion, you know, followed in that acquisition. And that very sparking event, you know, really is what kicked off a deluge of capital into the venture capital space in terms of ag tech. And I think, from a North American perspective, you know, there's $500 million a year being poured into the sector a number of years ago, and peaked at somewhere between $4 and $5 billion. So a factor of 10 times into the sector. You know, now I'm painting a very broad swath of what might be included in terms of ag and ag tech, and then there was a lot of food delivery that was included in that definition of ag that contributed to that factor. But you did start to see some of the Silicon Valley venture funds, you know, stamp the word agriculture on their websites, and they put themselves in that business for a period, and, you know, sloshed around a lot of money without really knowing what they were doing. But in terms of why aren't more venture capitalists putting money at risk here in Canada, I'm a bit at odds, you know, I guess with that assertion. I can't point to one team that I'm aware of that is a highly skilled team with a great product that is venture capital oriented opportunity that is having trouble finding financing. my perspective is those teams that are ready and deserve the capital they're finding an audience, they're getting funded. But I think, the one thing we haven't necessarily touched on is, the entrepreneurs should also be looking at, how old is the fund that they're getting involved in, how large is the fund, and who are their syndicating partners? Because it becomes a financing partnership, and you don't want to have just one check around the table, as in when we invest in a company, we don't want to be the only check at the table. So there better be other investors there to support, so that they know that the entrepreneur knows that they can be supported right through the life cycle of their organization. But in terms of the role of government and how they can be supportive, is that, the ag community, in terms of an ecosystem in the country, it has to go through the same evolution that the IT community did here in Canada. And we fostered great technology companies here in Canada, and that really spurred things on. Sir David Matthews in Ontario, we can look at as essentially one of the godfathers of tech in the country, who spawned, he's probably personally responsible for 50 or more organizations in Ontario that became tech companies, and many of them successful. And the successes of those companies were magnets to more money. And that has to happen here in ag in Canada for more capital to come looking for more opportunities. And it's, again, that one also has a long fuse on it because it takes time. And when you consider that it takes tens of thousands of entrepreneurs to build a good startup community in the country, and 70%, well, the opportunity for real success is about 1% of a new startup. So, it's almost statistically maniacal to think that my first venture is going to be a big success. And so it's obscene to think that we have entrepreneurs who hold on to these very damaging notions that they should never give up and that failure is not an option.
Yeah.
Failure is 99% of what's going to happen. So, but what the first company going under is not a failure. That's just level one of their education. And the very sad and destructive thing is that 77% of those entrepreneurs who fail on their first effort don't go again. If they did go again, now I'd be interested in talking to that entrepreneur because they've learned something. But 77% of them are exiting the ecosystem after they've just started learning.
Yeah.
And so to have programs that have them understand, because we put so much emphasis on that company as opposed to them as an entrepreneur. Okay, this is a path you've chosen. So this is the conversation I often have with entrepreneurs is, this is the path I could really give, I don't care about this company, care about you as an individual. And I think maybe if this first one works, it's almost the worst thing that can happen to an entrepreneur, because if the first one works, they develop this overblown sense of ego. They don't understand that there was a lot of luck and timing and different things that were in place that they had no control over. And then their second one is a spectacular disaster because they thought, hey, it's me, I'm a guaranteed win.
Yeah.
But if they failed on the first time, the second time, the third time, and off they go, now they're educated. And that's a real and genuine article that we can put push and capital behind.
Warren, I'm going to cut you off there just in regards to timing, but Andrew, do you have any comments in regards to, do you see VCs not doing early enough deals? And what do you see as the role of government to try and encourage more investment in early stage?
Yeah, I mean, I do think my impression is just statistically, Canada does fewer early stage deals than the US, for example. And I think that's partly almost a cultural thing. We're probably a bit more conservative as a country. I think it's partly like I agree with Warren that it takes time to do that. Like you have to think of it as an ecosystem, and we're building it over time. You don't get there right away. Silicon Valley didn't get built on the first day. It took a long time, and they they've been at it for a while. So I think part of it is just it's going to take time to build. I think I think part of it is it might be to do with just kind of like raw capital. My impression is that some of our larger capital providers in Canada, like the very large pension funds, are not really engaged in the venture capital space, and particularly in early stage venture capital space. So I think there's a question: how can you turn on the taps a bit so that a bit more of that capital in Canada has a chance to get into the earlier stage? There's a number of ideas. There's various tax credits like BC and Nova Scotia has. I haven't looked at them myself to say how effective they are, but I think that's the kind of thing AIC could do, is to look at the various policy mechanisms that are available to help create the conditions for this ecosystem to continue to develop, and to support those things that are already a big part of it. Like, my impression is there's a variety of programs, the research grants, for example, that are actually already having an important role. So I think to think of it as an ecosystem, it's in development. I think we've got a room to go to really get it off the ground, and there's lots of room for your organization to be involved in promoting the features of the ecosystem. But I agree very much with Warren that it doesn't happen overnight. It's going to be a thing that happens over a good amount of time, where a number of things are going to come together over time to start to kind of build a snowball.
Thank you, Andrew. Eric, do you have anything to add as well?
Yeah, I would echo my colleagues that I think it's early, and I don't think there's a solid understanding of the subtle, again, but important differences of the investment thesis in the ag space. And I think the other thing that it may seem like a small detail, but in the tech space, when companies are venture funded, they'll build a minimum viable product, and then they'll actually take it to market, gather real-time feedback, iterate from there, and if they're lucky, like Warren says, and part of the 1% club, ultimately be successful. I don't think we're very good today yet in Canada around how we pilot new technologies in the ag space and how we engage the producer community. There's a few, and there's a few notable ones, certainly in our neck of the woods, that are really driving kind of next generation innovation in farming. But our view is there's not enough of them. So finding ways to match founders with great ideas and ways in which they can pilot the technology. And part of the thesis for our emerging fund is we have enrolled some producers that understand farm innovation. One of them's even been a tech founder. And part of what we believe we can do is negotiate the ability to test some of the technology on real farms, and then again, learn and play. But I don't think that's done en masse in the ag community today. And again, I think a role for AIC might be to connect founders to producers that are really interested in trying new ideas.
I think Ag West is actually working on an idea that has some infrastructure related aspects to it that could help entrepreneurs. And I should connect Karen and you, Eric, to just talk a little bit more about that. Before we go on to the next questions, I do want to make one comment. I was working on a medtech deal this year that didn't actually have patents. It was more of an innovative technology and idea. It was an American technology. And I said, I don't know if we can raise capital for you. You don't have IP, you don't have any patents filed. And they said, well, let's try. I went to Canada to a couple of VCs, and they said the same thing as me. There's no IP, we can't fund, it's too early stage, it should be the role of government. I go back to the American side and I talked to 3 investors in America. They all invested in the idea. They didn't need intellectual property. So it's sort of the risk. It's maybe Canadians are a little conservative. But on to the next question, which Andrew, I'm hoping you'll be able to lead this one. What are some of the trends you've observed from the VC investor side in the agri-food industry? are the segments of the industry that are more specifically targeted for investment, or is the overall volume of investments in the industry growing, stable, or decreasing?
Yeah, overall in the sectors we're involved in, I'd say they're increasing, and there's a couple notable segments that are increasing dramatically. And the one I would point to, which most of you will already know about to some extent, is the sort of plant-based protein replacement type segment, which is the sort of poster child for that was Beyond Meat, which was a Silicon Valley funded company with, funders like the Gates Foundation, and a number of those Silicon Valley investors put significant capital. And this a little bit harkens back to our last discussion, because when they invest in companies, it's often hundreds of millions of dollars. It's a scale that we are rarely able to do up here. Anyway, that's a company now that with $400 million in revenues is trading at around $9 billion on the NASDAQ exchange. So that's kind of driven extreme interest in that segment. And there's a number of companies that are being funded. There's a whole series of these SPACs, which are these public vehicles that are made to buy private companies and take them public. There's a number of Canadian companies that are playing in this space. We have a few in our portfolio ourselves that are in this sector. So I would say that's kind of a vertical that's caught some intense investor interest and consumer interest. I mean, it's a lot of consumers who I don't think expected to be trying veggie burger are trying it today, and then it's kind of it's spread out into the whole. There's plant-based butters and milks and all. It's gone much broader than just the kind of meat replacement segment. But that's the most notable one. There's a clear intense investor interest in that vertical at the moment.
Thank you, Andrew. Eric, would you like to comment on this as well?
Maybe just to pick up where Andrew left off, what we're seeing certainly in our neck of the woods, there's really 4 interesting kind of subsectors that I think are getting the most attention. Precision ag. So the biggest investment I think to date out of the protein industry supercluster is a Conexus or cultivator resident company called Precision AI. So that I think precision ag is an area. I spoke about my visit this morning with Raven Industries and their kind of headquarters here in Regina around autonomous agriculture. So that's a second one. The third, just by nature of the supercluster being here, is we are seeing this kind of gravity around proteins and capturing more of the value chain around protein. And Bill Gruel and the team at Protein Industries Canada, I think, are doing a remarkably good job at getting, a government commitment, policy commitment into the hands of really promising founders. And I'm excited to see what comes out of that. And then the last area that I was talking to our managing director in our VC fund this morning about was just traceability. And, I think, of course, all the health challenges that we're all faced with in real time today are going to be a really interesting maybe precursor to more emphasis in that area in the coming years. So those are the 4 areas, John, that we're certainly seeing lots of interest in our neck of the woods.
Thank you, Eric. I always find it funny because I'm involved with Authentomics and Food for Hud that there's more honey sold in the world than ever produced on an annual basis. So there is a reason for identifying the actual product as being true. Warren, would you like to comment on this area as well?
I think, from our perspective, it's whether you're looking behind the farm gate or in front of it. The behind the farm gate applications that often require, going and knocking on those doors one at a time. We've been in that space. and recently sold a company to TELUS. That was a behind the gate or kind of an organization application. It's an expensive and a slow way to get out to market if you have to go to the farmers directly. So we're focused on perhaps other areas now where we can get traction faster, better, quicker, scale higher, as opposed to that particular route. But in terms, I wanted to revisit maybe the inference about Canadian and American tolerances that you opened the comment with, or opened the question with, and the Americans investing all three of them into without IP. So one of the things that's very important to us, regardless, of the sector that we're looking at within ag, is that there is sustainable differentiation, right? And intellectual property or protected property in that regard can be one of those things. It's not the only thing that can get you sustainable differentiation, but certainly it's something. And the reason why it's important is not because we're risk adverse, but because we know where the value is on exit. So that sustainable differentiation is the value on exit. And if you go, plow ahead into market with a product that can be easily knocked off, well then, and you develop a nice market for your competitors, well then now you're on a race to zero on pricing, and because you're not differentiated. So, I think those kinds of things are part of our criteria as opposed to particular segments.
Thank you, Warren, for your response. I'm going to bring up one question that was brought up from the attendees, just to make sure we deal with it before the conference has ended. And the question came from Samuel Bonte, and I'm sorry about pronouncing your last name, Ankama. Hopefully I got it close to being right. But his question is, over the past decade or so, we've argued that lack of venture capital and angel investment is one of the biggest challenges to innovation in this sector to Canada. In addition to the answer from Warren, what else could be considered the problem, and how can that be addressed? Warren, do you want to try and answer that first?
So I think there is capital available. There's not a lot of ag tech venture funds in the country, and I think we have one less this year than we did last year. But I think it's coming, but it's going to take more successes to do that. And one of the things that is apparent, however, is that American funds are looking to those that are here, to be their syndicating partners in Canadian deals, because there is some tremendous advantages to basing and growing your company here in Canada as opposed to the US. And when you start explaining some of those advantages, to those American investors, well, that becomes very, very interesting. So, the shred credits and IRAP and different programs that we have that they simply don't have down there simply decreases the cost to technology development initiatives to such an extent that it levers your IRR. I mean, it's that significant. So I think in terms of getting funded, it's let's from a policy basis, let's build out the infrastructure and the ecosystem, and that takes money and time and commitment to make that happen. And I think we can look at the IT community and follow their lead and where they wasted money as a learning, but do a lot of the good things that they did. Then from an entrepreneur community, getting educated is just simply that's. There needs to be places for them to do that, and there are a number of good places that have been launched and established over the last decade in Canada that are providing good education for those entrepreneurs. And then there's those make sure that they have at least know who the investors are in the space, so that they know who to approach and where they're relevant. Because I think another mistake I would have made as an entrepreneur is thinking that an investor is an investor is an investor. And that's certainly not the case. And I would want capital that was relevant to my segment, so that I'm not wasting my time pursuing irrelevant money. But I would also want capital that comes with network and support and education and access to customers. So that value-added capital is a big driver. And I think, like, right now it's still very early days, but for those ambitious people, they can find all of those things.
Good. Andrew, would you like to comment on that question in regards to, we've been talking for the last decade about lack of venture capital and risk capital, but it seems we're saying that it's not as bad as people think. What do you think is the answer?
Yeah, I think it kind of comes back to this idea of building an ecosystem, and it takes time. It's like a flywheel. You need all these things, and you start to slowly build up some momentum, and then that spins off. The people who sell the businesses can put capital back in, and you get entrepreneurs that have done it before, that whole thing, and it takes some time. And I think it's really, there's no, like, it's one of those, there's no silver bullet. Like, you need to have the right policies. So, like, the things like the SR&ED credits, I think are critical to, to build on those kind of government programs. You need the private capital. So all of us who are bringing funds, but hopefully there'll be more in the future, and ever larger funds. And I think that's happening, but it doesn't happen overnight. You need the pool of entrepreneurs who I said who've done it before, who can come back and mentor and be part of the capital formation process, or start new ventures. So you need to get, like, as many of those things kind of moving in the right direction. I think it's happening. It's slow, and it probably could happen a little faster. I'm going to keep harping on this. Like, if I was a policy person, I would be thinking, how do we get the pension funds in on the game? Because, I mean, just to go back to the history here, like in I don't know exactly, but sometime around 1990, the pension funds had to invest significant portion of their capital in Canada. I think it might have been 75 or 80%. And then at some point we said, you don't have to invest any of your capital in Canada. And I think there's somewhere in the middle there that might be a better solution, and it might be a very small amount of capital for the size of those capital pools that could be engaged back into the private Canadian companies. So I think there might be a few other policy measures there that could get the flywheel spinning even faster. But yeah, those are some ideas.
Yeah. Eric, could you close this one off before we go to the final question for the panel?
Yeah, I would agree 100% with Andrew. I mean, the only thing I would add is I think what we're finding, at least, is the larger institutional investors, there's just not enough critical mass today. So for them to spend a bunch of time and energy to place $5, $10, $15 million, they're looking to place 20, 30, 40, $50 million. And there's not enough funds of significant size to make that happen. And there's not, to be candid, enough critical mass of commercialized ideas yet. But as as I said earlier, we're really optimistic that we're on, notwithstanding it's been a decade, that we're on the edge of some real momentum acceleration in this space.
I should make can I jump in and just make one other comment of a program that I think, it's a kind of program that I think does have some effect, and this is the VCAP program, where Ottawa has helped to fund certain fund-to-fund programs that they then have to kind of, I think it's get $3 to $1 for the federal dollars, and then they invest them out into VCs in various sectors. And we've actually, our fund has not been a beneficiary of that program yet, but I still think it's kind of the kind of program, one of them that starts to add up. And it's also a mechanism for the large pools of capital, like the pension funds, to have fund-to-fund entities that can do the diligence work, and so those kinds of things I think are part of the building of the ecosystem that eventually will create success.
Andrew, I've got a question for you. You brought up strategics, and I know we've commented a little bit about it, but where do you see the role of strategics for entrepreneurs, like in regards to comparing them to banks, VCs? Where should they come in? And what are strategics, maybe for some people?
Yeah, so strategics, would be the corporations that whose business, who are already in these sectors. So in our sector, be companies like Maple Leaf Foods or McCain or any others that are already in some part of the agri-food space. In the U.S., there's more of them, and they tend, from my experience, they tend to be more active. I mean, they're the exit strategy for most entrepreneurs in our sector, and in that respect, they're that's a really important part of the ecosystem. But what we're seeing is they're starting to come a little earlier. They're starting to put together their own venture funds, try to get in more at the ground floor. I think they're realizing that if they wait too late, they end up in a bidding war with a bunch of other strategics, and so they're better off getting in a bit earlier. So I mean, they're hard to access as an entrepreneur right out of the gates. I think you have to get yourself up to a certain level of, in my experience, you have to get yourself up to a certain level of revenues before you got a good shot. Although having said that, it's not a part of the sector we're active in, but I know that TELUS has raised ag tech fund of some description. So there's more of them that are, and that's an interesting one because they're not an obvious ag tech funder. So that suggests there's something happening here in the sector where corporations are starting to get involved, which is a good sign, I think.
That's good. Now, okay, we're now on to the final planned question, and then we'll be opening it up to the questions from the attendees. So what are some of the recent developments that you see are promising or concerning for investments in the agri-food sector? And I think I was going to get Eric to lead this question off. And I guess please keep your answers to as brief as possible, because we do want to answer some of the questions that have come out from the panel or the attendees.
So I think what's exciting for us is that I think there's real interest from producers to be thinking differently about farming and agriculture. And again, I follow lots of blogs and commentary from some leading edge farmers, and really the interest from the broader producer community in focusing on what are the opportunities for them, to increase efficiency, production, whatever, through innovation. I think it's never been greater. So I'm excited about that. I am excited that there's more people showing interest in the investment thesis of investing in ag. And I think, some of the comments you heard earlier is people expressing interest in co-investment opportunities from outside of Canada. I hope that we can create those pools of capital internally, but the interest from outside is helpful in the short term. And then certainly in our region in Canada, there is real excitement around creating, a food hub, kind of a globally successful ecosystem. And we do have some unicorns. AGT Foods World Entrepreneur of the Year is headquartered here and is doing some very cool things around logistics, around drones. And then the concern, as I just think, building critical mass of founders, of capital, and then making sure that as Canadians, we can retain as much of that ecosystem as possible, because I think it's really important for the future of GDP growth for the country to harvest this potentially once in a lifetime opportunity to really harness the opportunity that exists in ag and ag tech.
Thank you, Eric. Warren, would you like to give your views?
Well, in the interest of time, I'm not sure I have really anything meaningful to add to what Eric has already very well sort of highlighted. But in terms of opportunities, it's almost difficult to shoot an arrow in any direction in the ag space and not find an opportunity. This is that last industry that needs to undergo its digital revolution, right? And so the opportunities are plentiful. But one of the issues that we do need is to make sure that we have the management to carry them forward.
Andrew?
Yeah, I agree with what's been said. I guess the only other thing I mentioned in terms of one development that's both promising and concerning at the same time is the availability of public capital, like the public markets, which has some real promise. And we've had, or I mentioned earlier, one company that's successfully had an IPO in the last little bit, but there's also a lot of companies that are being tempted now to go public too soon, and sometimes that's kind of a workaround to not having venture capital early enough. So it's kind of got both good sides and bad sides to it. It's nice to be able to have public markets to be able to have exits, but I do think if too many Canadian companies are going out and going public too early, that they may run into some troubles along the way. And so it's kind of got both pluses and minuses to it.
Thank you, Andrew. I'll say one thing that I find very promising is that we are having conferences and we can get Canadians at the high quality of panelists that we have right now. It's telling us that the infrastructure for investment capital for agriculture in Canada is developing, and I'm very excited about that. So again, I want to thank you guys for all participating on the panel. We have a couple of questions from the attendees. Serge, do we have time to answer them, or are we out of time?
Maybe if people can go very quickly, we've got 7 minutes, and but we thank everyone. So let's go quickly, John, if you want to go through the questions.
Okay, the first question that was primarily to Eric, and it was from Dari. I'm not good at pronouncing names. So, Eric, could you share how the credit union launched its original financing in competition with the Canadian charter banks historically in the financial space? That one's specific for you.
Thanks, Darrell, for the question. I think it goes back 80 years, obviously, and crayons were a way to pool capital to support things which weren't otherwise being supported by Canadian banks and others. And, it's a very competitive space today, certainly on the debt financing side. And I think crayons have evolved to be uber competitive in farm finance. And I think we see the venture capital play that we have today as maybe just a next generation idea of a way to pool capital and find a blue ocean that frankly the charter banks aren't playing in today in terms of early stage ag and ag tech. So I guess we see what we're doing today as really akin to what happened in our industry 70 or 80 years ago.
Okay, thank you, Eric. And we have also a question from Justin. His question is, in evaluating pitches, how much weight do you put on project finances, which may be wrong in the early stage, and overall business outcomes versus technical details and viability? I'll open it up to all questions. I think you can read it, but any one of you can answer it and put your views on. Warren, I'm going to.
Sure. So, I think right now that there's a lot of tendency to put too much emphasis on the actual pitch. We've had very good outcomes from initial pitches that I would qualify as outright disasters. But who is presenting is much more interesting than the pitch itself. But and there's organizations that provide pitch counseling and all that sort of thing, and I just find it's not important. But what is important is everything. What is the value of the company, right? The approach to market, the valuation, the background of the entrepreneurs, is it relevant, and do just your interaction with them. This is going to be, if we're going to invest together, this is going to be a partnership. So understanding even just that interpersonal dynamic. Is this a person that I'm going to spend a lot of time with, and do I want to? And same with them, with me and with us as an organization. So it's what's the approach, the management finances, how much thought have they put into the implementation plan? We hear a lot of times there's a business plan, which is all of the text around the product and the market and the management, and then at the back, there's some financial spreadsheets in Excel, and all the numbers go up, right? Well, there's no connective tissue between those two documents. So what I always encourage the entrepreneurs is show me a 4-quarter implementation plan segmented out by the functional areas of the company, quarter 1, quarter 2, quarter 3, quarter 4, and then just bullet points what has to occur in each one of those quarters from each one of the functional areas, so that we can get to a revenue number or a build out of company by quarter 4 that shows us that you've actually gone through that hard work and detail work of going through the thought process of what it's actually going to take to build a company that underpins that level of sales projection that the little algorithm spun up inside of Excel. So if that helps.
Yeah, no, good. Anyone else? Eric, Andrew, would you like to add comments? No. Well, I think I want to thank the panelists for participating and volunteering their time. I found it very informative and very helpful. Serge?
Thank you very much, John, and thank you very much to all the panelists. I did really appreciate this discussion. Lots of interesting information and lots of takeaways as well. One of the first presentations where I think AAC can turn around and say, well, we've got some homework to do. So great things to bring back to the board and to discuss on that. I think that will give us some elements of discussion in the future. Thank you again. Next week, we have the last of our panels and panel discussion as we enter the month of December and we get ready to exit 2020. So next week will be on the government funding, government support, and how Canadian places internationally. We have people from the government of Ontario, we have people from industry, and we have even someone from an international UN organization to provide some international context as well. So thank you everyone for participating, and we look forward to having everyone in our meeting next week. Thank you.
Thank you. Bye-bye.